of the subcommittee at any time. Without objection, members of the full committee not on the subcommittee are authorized to participate in today's hearing. This hearing is entitled "The Role of the International Monetary Fund in a Changing Global Landscape." I now recognize myself for 4 minutes to give an opening statement. The International Monetary Fund plays an essential role in the modern global monetary system. When a financial crisis hits, the IMF is essential to ensuring the system does not collapse, stepping in to calm markets and to prevent chaos. This work, however, has never been without controversy. The IMF does and should play a critical role both as a policy advisor and as a lender of last resort. Some, however, rightly in my mind, criticize the IMF for demanding that countries apply what may be overly tough policy reforms in times of intense stress, requiring governments to cut social spending and wages. Debates about the proper role of the IMF resurfaced when the COVID-19 pandemic triggered a sweeping global recession. The IMF's COVID response suggests that it has shifted strategies somewhat away from the traditional policies of austerity. Instead, this time around, the fund encouraged governments to spend liberally to bolster struggling economies, to address the pandemic, and to not withdraw support too early. But now, nearly 2 years removed from the start of the pandemic, the IMF has urged countries to prepare for a return to normalcy. As governments beat back the virus and distribute more vaccines, the IMF will be monitoring infection rates to ensure that recovery strategies are fair, inclusive, and sustainable. And with the pandemic pushing nearly 100 million people worldwide into poverty, the IMF will use its research skills and technical assistance to help build and rebuild equitable societies. Now, other challenges exist. Dozens of countries are nearing unsustainable levels of sovereign debt, requiring IMF involvement to coordinate with creditors, assess risk, and work with international partners to restructure payment plans in a way consistent with the well-being of their people. Likewise, climate change and its associated costs and risks will require the IMF to help identify macroeconomic risks related to that, to offer technical assistance, and to leverage its financing tools to assist countries in tackling these systemic and structural issues. The United States is the IMF's largest financial contributor, and we have a deep interest in ensuring that the fund is prepared to confront these challenges head on. A well-prepared IMF can work closely with policymakers to enact reforms that stimulate inclusive growth, adapt to macroeconomic threats, and overcome unexpected obstacles. And of course, Congress, and this subcommittee in particular, plays a vital oversight role in tracking the IMF's progress and boosting resources when they are needed. One issue which I hope we will deal with a bit today is the issue of the SDRs. Last August, when the fund deployed $650 billion of special drawing rights, or SDRs, several of my colleagues argued that the SDRs could provide unconditional liquidity to countries who act against broadly shared international values, like China's activity with respect to its Uyghurs, the activities by the despot in Syria, and of course, Russia now sits poised to invade a vulnerable sovereign country. Since last August's SDR allocation, however, none of those countries have converted their SDRs into hard currency, and the IMF has blocked SDR access to countries with unrecognized governments like Afghanistan, Venezuela, and Burma. Nevertheless, we should continue discussing these arguments on their merits. After a worldwide pandemic, a global financial crisis, and many other fiscal emergencies, the fund is no stranger to tough decisions. Now, with the world's economy facing new and evolving challenges, the IMF must be ready to adapt as well. With that, I'd like to welcome our panel of witnesses and thank them for helping us continue this important discussion. I now recognize, prior to recognizing the chairwoman of the full committee, I now recognize the ranking member for 5 minutes for an opening statement.
Thank you, Mr. Chairman, for holding today's hearing, and thank you to our witnesses for joining us today. The International Monetary Fund serves an important role of promoting international macroeconomic stability. I recently had the pleasure of visiting Bretton Woods, New Hampshire, the site of the 1944 meeting where representatives from 45 nations gathered to discuss post-war economic recovery and ultimately resulted in the creation of the IMF. Over the decades, the IMF has grown, adapted, and changed. Our hearing today will examine the appropriate role of the IMF and how it has functioned through crises, including the global financial crisis, the Eurozone crisis, and most recently, the economic crisis brought on by the COVID-19 pandemic. We will also examine how the IMF has evolved, including how recent developments in the fund's objectives may stray from its core mission as a lender of last resort and catalyst for reform in struggling economies. As the COVID-19 pandemic raged across the world, many developing nations struggled and turned to the IMF for assistance. The IMF abandoned the traditional and longstanding requirements, as the chairman noted, associated with its loans, offering no strings attached assistance. As the COVID crisis subsides, we must face reality. The IMF is a lending agency and must be repaid. Unfortunately, what began as an attempt to help struggling nations navigate the challenges from the pandemic has further fueled the IMF's mission creep away from its traditional role as lender of last resort into a politicized development organization. As we've seen with other lenders of last resort, such as the Federal Reserve, activist organizations and/or vocal policymakers are intent on using the COVID-19 pandemic as a smokescreen to corrupt the IMF into a no-strings-attached checkbook or focus it on matters outside of its narrow mandate. Last summer, the IMF approved a $650 billion disbursement of its special drawing rights so that developing economies could obtain hard currency and import medical supplies and personal protective equipment to combat the pandemic. While potentially well-intentioned, this allocation was troubling because it strayed from the core purpose of SDRs and awarded handouts to U.S. adversaries. SDRs are intended to address a long-term need in world reserves, not hand governments unconditional aid to boost emergency spending. Based on the SDR allocation formula, only 3% of SDRs end up going to the poorest nations. Meanwhile, other countries such as Mexico and Argentina admitted their money may not be spent to tackle COVID-19 as intended, but rather be used to pay off old loans or prop up struggling state-owned enterprises. Even more unsettling is the fact that these SDRs will go to countries like Syria, Iran, China, Belarus, whose brutal dictators are certainly not using them to purchase PPE for their citizens. Despite the misgivings by some Biden administration Treasury Department officials about the $650 billion SDR allocation, some of my colleagues on the other side of the aisle have called on the IMF to triple down with an additional $2.1 trillion no-strings-attached handout to countries like Russia and China. A portion of those SDRs is also being funneled into a new resilience and sustainability trust at the IMF, intended for climate change and public health loans, showing a complete lack of understanding or perhaps a blatant disregard for the true purpose of the IMF. This attempt to redefine the core mission of the IMF comes at a time when its leadership is mired in scandal. Last year, a bombshell investigation revealed how Kristalina Georgieva, formerly CEO of the World Bank, pressured her staff to manipulate data after Chinese officials complained their economy hadn't ranked highly enough in the bank's widely read and regarded Doing Business report. An independent report by law firm Wilmer Hale detailed the episode, and Ms. Georgieva now leads the IMF. Members of this committee from both parties expressed concern about the leadership at the IMF following these revelations. Republicans and Democrats can agree that strong, credible leadership at the IMF is necessary to ensure that the fund is able to sustainably navigate the future and operate squarely within its mandate. While we are at the crossroads in global competitiveness, as China seeks to usurp the U.S. as the preeminent economic power, China's debt trap diplomacy has left many developing economies at the mercy of the Chinese Communist Party. There is little debt transparency about loans from China. I'm concerned that no strings attached funds from the IMF will be used to satisfy the usurious terms of Chinese loans to struggling economies, including through the Belt and Road Initiative. Congress should demand reform and accountability to ensure this is not the case. I fear, Mr. Chairman, that the IMF has lost its way. I hope the hearing today will inform us on how best to return the IMF to its core mission and ensure that it remains a tool for macroeconomic stability well into the future. Thank you, Mr. Chairman, and I yield back.
I thank the ranking member, and I now have the privilege of recognizing the chairwoman of the full committee, the gentlewoman from California, for 1 minute.
Thank you, Chair Himes. The International Monetary Fund has long been criticized for its willingness to impose painful reforms on countries in crisis, with little concern for how the burden of these painful economic adjustments were distributed in society. In many cases, the effect was to undermine democracy itself, as the people who were made to bear the short-term pain began to associate the IMF's imposed austerity with their domestic democratic government. While there's been some improvement recently, I look forward to hearing from our witnesses today, not only on the issue of conditionality, but also the increasing levels of debt distress many countries now face and how we should best address these challenges. I yield back and thank you very much.
I thank the chairwoman, and today we welcome the testimony of our distinguished witnesses. First, we have Dr. Daouda Sembene, who is a distinguished non-resident fellow with the Center for Global Development. Next, we will hear from Ms. Stephanie Segal, who is senior associate with the Economics program at the Center for Strategic and International Studies. Then we will hear from Professor Jayati Ghosh, who is a professor of economics with the University of Massachusetts at Amherst. Next, we will have Dr. Joseph Stiglitz, who is a university professor at Columbia University. And last, we will hear from Professor Kenneth Rogoff, who is the Thomas D. Cabot Professor of Public Policy and Professor of Economics at Harvard University. Witnesses are reminded that their oral testimony will be limited to 5 minutes. You should be able to see a timer on the desk in front of you, or if you're remote, which I think we all are, on the screen in front of you that will indicate how much time you have left. I would ask that you be mindful of the timer and quickly wrap up your testimony once your 5 minutes have expired so that we can be respectful of both the witnesses and other committee members' time. Without objection, your written statement will be made part of the record. Dr. Sembene, you are now recognized for 5 minutes for an oral presentation of your testimony.
Thank you. Thank you very much, Chairman Himes. I'm grateful to you, Chairman, Ranking Member Barr, Chairwoman Waters, and distinguished members of the House Financial Services Committee, National Security, International Development, and Monetary Policy for inviting me to speak today at this hearing on the role of the International Monetary Fund in a changing global landscape. My name is Daouda Sembene, and I am a distinguished non-resident fellow at the Center for Global Development. Until 2018, I was an executive director at the International Monetary Fund, where I represented 23 African countries on the executive board. During my tenure, I chaired the statutory board committee, which is responsible for strengthening collaboration between the IMF and other international institutions, notably the World Bank, the United Nations, and WTO. After my IMF board tenure, I served in my home country of Senegal as Senior Economic Advisor to President Macky Sall. I now run a global development advisory focused on Africa and called AfriCatalyst. In the written testimony I submitted for your consideration yesterday, I made a number of detailed suggestions about the future role of the IMF. Now I would like to take this opportunity to emphasize some key messages I wanted to convey in my testimony. My first message is that the IMF should continue to play a central role in efforts by the international community to address global challenges such as climate change and pandemics, including by advising countries on appropriate macroeconomic policy responses. This would be in line with its mandate, especially in view of the enormous potential of this calamity to shake global financial stability and derail global recovery. At the same time, I believe that the IMF should play a special focus on the world's most vulnerable countries where it can make the most difference. In addition to policy advice, the institution should be well equipped to deploy on a timely and need basis adequate level of financial and technical assistance. At this time, an urgent role for the IMF to play is to sustain its support for countries around the world that still faces daunting challenges exacerbated by the COVID-19 crisis, including rising poverty, significant financing gaps, growing debt vulnerabilities, and weak social protections. My second message is that to be more effective, the IMF needs to adapt its business model and policies to the evolving global landscape, while better leveraging partnerships with other multilateral institutions. For instance, this is critical to ensure that access of developing countries and fragile states to IMF resources during this time, crisis time, but also in the post-pandemic era, is more determined by the scope of their financing needs rather than the size of their quota. The IMF also needs to make progress toward full country ownership of macroeconomic adjustment in countries that request its financial assistance. Let me now conclude with my final message. Successful IMF engagement with member countries hinges on timely support from its major shareholders, particularly the United States. But it also requires holding IMF leadership accountable for institutional performance. And the existing decision-making processes prevailing at the IMF, no major initiative can be approved by the executive board without the US consent. And then, without US leadership and support, the IMF ability to fulfill its mandate and provide timely and adequate support for countries in most need will therefore be very limited. Thank you, Mr. Chair.
Thank you, Dr. Sembene. Ms. Segal, you are now recognized for 5 minutes.
Thank you. Thank you, Chairman Himes, Ranking Member Barr, Chairwoman Waters, and distinguished members of the subcommittee. Thank you all for the opportunity to testify before you today. The IMF's Article of Agreement lists 6 purposes that guide the institution in all its policies and decisions. They include the promotion of international monetary cooperation and temporary financing to help countries correct macroeconomic imbalances. In practice, the IMF focuses on 3 principal activities. It monitors economic and financial developments through IMF surveillance. It provides financial support to facilitate adjustment and shorten crises through IMF lending, and it builds capacity with training and technical assistance through capacity development. Over the years, these activities have evolved along with the international system. That evolution is often prompted by crisis and the recognition that existing tools may not be adequate to deal with current challenges. Given the backdrop of the past 2 years, unprecedented in so many ways, it is not surprising that we're seeing again further evolution. On the one hand, we have a greater appreciation of the risks to growth and stability posed by threats such as climate change and pandemics. On the other, there is concern that an overly expansive list of items deemed macro-critical will dilute the IMF's effectiveness and steer the institution away from its founding purpose. The IMF and its members need to strike a balance between these competing considerations. I'll focus my remaining time on 2 challenges facing the global economy: climate change and debt. First, on climate change. One of the world's largest insurers recently called climate change the biggest long-term threat to the global economy. A report from the Financial Stability Board highlights that physical risks, as well as a disorderly transition to a low-carbon economy, could have destabilizing effects on the financial system in the relatively short term. Given these realities, failure to engage on climate would be at odds with the IMF's mandate. The question is how and whether the IMF's tools are up to the task. IMF surveillance is the most immediate and consequential way in which the institution can engage its members on climate. The IMF's board supports coverage of climate-related issues in Article 4 country reports whenever macro-critical. The board also supports including climate in the financial sector assessment programs where climate change may pose financial stability risks. IMF surveillance entails a bilateral component, which applies to all 190 members, and a multilateral component which covers regional and global conditions. This structure enables the fund to engage on climate at the country level, where policy is typically set, and multilaterally, reflecting climate change mitigation as a global public good. Unlike surveillance, IMF lending programs are active in only a subset of IMF members. Many of the largest carbon emitters have not had an IMF program in decades, if ever, meaning the IMF's ability to gain traction on climate issues through lending activities is more limited. That said, there can be a role for climate-related issues in IMF lending. Climate issues can impact budgets and the health of financial systems, areas covered in standard IMF programs. Also, the proposed Resilience and Sustainability Trust, or RST, provides another template for such engagement. If approved and pending donor financing, the RST would be available to vulnerable members to target macro-critical structural challenges such as climate change and pandemic preparedness. Financial support for the RST could come from rechanneling SDRs to the most vulnerable members. This would also address one of the common critiques of the recent allocation as not sufficiently benefiting the poorest countries. Turning to debt, the subcommittee rightly calls out rising levels of unsustainable sovereign debt as a challenge facing the IMF. The IMF alone cannot resolve debt vulnerabilities. Such resolution requires agreement between the debtor country and its public and private creditors to reschedule or restructure the debt. But the IMF plays an essential role in developing the macroeconomic framework and financing envelope that serve as the basis for such an agreement. The IMF, with G20 support, can drive this process and call for more predictable and time-bound targets for negotiations. Further, the IMF should bolster its concessional instruments. Additional donor support to the Poverty Reduction and Growth Trust, or PRGT, along with the RST is needed. The FY22 budget request includes funding to cover grants to the PRGT, and subsidy cost of rechanneling SDRs would demonstrate US leadership in supporting the IMF's most vulnerable members. In conclusion, I just want to thank the subcommittee for the chance to share my views, and I look forward to your questions.
Thank you, Ms. Segal. Professor Ghosh, you're now recognized for 5 minutes.
Thank you very much for this opportunity. I feel deeply grateful to be allowed to address this committee. And I want to emphasize the crucial role that has already been talked about of the IMF, not just in maintaining financial stability, but in reviving the global economy. This is particularly important because there has been such inequality in fiscal stance over the course of the pandemic, with the advanced countries spending on average more than 16% of GDP in additional COVID-19 related spending, emerging markets spending only 5%, and low-income countries around 2% of their GDP. And this has obviously hindered their possibilities of recovery. In this context, the release of new SDRs has been absolutely crucial, even though they are unequally distributed, because SDRs are automatic, they are debt-free, and we have heard already about the problems of sovereign debt in much of the developing world. They do not require fiscal conditionalities, which can be counter-cyclical with so much other IMF lending. And it is effectively costless, which is a huge thing. There is no cost for other countries that do not use the SDRs. What's important to remember is that these are effective even when they are not used, because the additional SDRs add to reserves, they reduce the borrowing costs of the recipient country, they provide some kind of a cushion for the very volatile capital movements that we have seen and we are likely to see more of as US and other interest rates are raised. But we also see that at least 80 countries have already used these SDRs in various ways to add to their imports, to pay back the IMF, which is a very useful thing going forward, and for their own budget increases. What's worth noting is that this has added to some degree to helping the world economy revive, but it's also helped the United States economy. There's been a very big increase in exports, monthly exports of the US after August 2021 when the SDRs were allocated. And I have provided in my written testimony some data on this. If you look at specific countries like Ukraine, which is very important nowadays, Philippines, Congo, you find that there is very significant increase after they have used the SDR allocation for additional imports. It's also worth noting that, in fact, the countries that many members of this committee are concerned about cannot access these SDRs. And it's not just that they have not, I mean, Russia, Iran, Syria, etc., cannot access it because the international banking system does not enable them to get hold of it. So even though formally they have got an increase in SDR reserves, they will not be able to use them. And other governments which are not recognized by the IMF, Afghanistan, Myanmar, Sudan, Venezuela, they cannot access the SDRs, even though it's in the country's reserve formally, but the governments cannot access it. China does not need SDRs. China already has $3.5 trillion of reserves, and it really is unlikely to make any difference to China whether it gets SDRs or not. In addition, it's very important to enable the rechanneling of SDRs, as Ms. Segal has already pointed out. And I do believe that there are many important and imaginative ways in which the United States government can use its own SDR allocation in this way. I believe that the RST, the Sustainability Trust set up by the IMF, is not the ideal mechanism. It's too small, it's only $50 billion. it involves debt, which is an additional problem, with associated conditions. It's only meant for low-income countries or the countries that are IMF program countries, which really means that it's so limited that it's unlikely to have much impact. Instead, we should actually think of other ways of using the IMF, the SDRs, including the US allocation, the additional allocation, which it will never otherwise use. It could be used to improve the capital base of regional development banks, which can actually then lend out more to meet sustainable development goals, to provide climate finance, and so on. It can be provided in a trust that auctions the resources not on the basis of the ability to repay, but as grants for the best climate investments for both mitigation and adaptation, which is absolutely crucial. This is important because we find that IMF programming still contains some austerity. Even though the most recent loans did not involve it, most of the programming contains measures to reduce government spending. We know that this kind of inequality has social political consequences, it has global consequences, and therefore it's important for the United States, which has such ability to influence IMF positions and itself holds such large SDR reserves, to assist in a global institution meeting global challenges. It's important not to be stuck in a mandate that was created 70 years ago, to allow a multilateral international financial institution to meet the global challenges that we face today, because otherwise we're unlikely to face them. Thank you.
Thank you, Professor Ghosh. Dr. Stiglitz, you're now recognized for 5 minutes.
It's a pleasure to be here to address you on a set of issues that are so critical. We all know the importance of global financial stability. We cannot have a robust American economy in a world of financial instability. Enhancing stability can best be addressed multilaterally through the IMF. This is especially important as the world faces a multiplicity of risks: the pandemic, its economic aftermath, the climate crisis, the inequality crisis. All of these touch directly on the core mission of the IMF. It would be a dereliction of its responsibility if the IMF would have paid insufficient attention to any of these. Let me emphasize, this is not an issue of mission creep. So too, the SDRs have long been part of the IMF's toolkit and part of its architecture. Again, this is not a departure from its core mandate. The consequences of the pandemic should be obvious. Debts in most countries have increased significantly, and there is a growing concern that rising interest rates combined with high levels of debt could precipitate debt as well as balance of payments crises. Such a crisis could be much harder to manage than earlier crises. Over the intermediate term, the consequences of the climate crisis could be even greater. 2008 showed that what could happen to global financial markets as a result of the mispricing of the US mortgage market. There is a significant risk of a mispricing of a much greater part of the global asset base, both fossil fuels and real estate. The correlated risk would be hard to contain. What the IMF can and should do for international financial stability is vital. In the remaining time, I would like to call attention to a few areas of concern. First, the $650 billion issuance of special drawing rights was of extraordinary importance. Several advanced countries have agreed to recycle these funds to those that need them. There is a need for improvements in the mechanism for doing so, as I've detailed in my written remarks. There is also a need for more issuances of special drawing rights. SDRs can be an important tool for sustaining global aggregate demand during periods when global demand is insufficient. The international community has made a commitment to help developing countries make the green transition. An annual emission of SDRs would be a reliable way to achieve our climate commitments. The issuance of SDRs do not cost the US government anything, either in present or future cost. Second, many countries will need to restructure their debt, as we've already said. If we are to avoid the too little, too late syndrome that has proven so costly, all creditors need to cooperate. Programs need to be designed to incentivize this. The debt sustainability analyses, which are the cornerstone of debt restructurings, have to be improved. For instance, there are analyses that don't recognize that making excessive demands on a country reduce growth. Third, for many countries facing debt crises, IMF programs can play a helpful role. That requires that they be structured appropriately. The question is not about whether conditions should be imposed, but what conditions and how they should be determined. Countries shouldn't be stifled by unnecessary and counterproductive fiscal tightening or inappropriate structural reforms. Fourth, the fund needs to go further in its new institutional view of capital account management techniques. These should not be viewed only as a last resort. They are among the instruments that many countries will need to draw upon in this world of financial instability. Fifth, the IMF has come to increasingly rely on surcharges on borrowing countries to finance its operations. This is inappropriate and counterproductive. The IMF was supposed to help countries dealing with foreign exchange problems. It is now contributing to their foreign exchange problems through the surcharges. I focused my remarks on global economic and financial risks. These could compound the political turmoil around the world that is so evident. The US plays a critical role with the IMF. We are the only country with veto power. We will be held accountable for the successes and failures of the IMF. But I shall call for shorthand, the old IMF won few friends and made many enemies. It was marked by hypocrisy, with advanced countries employing counter-cyclical policies as they demanded that others engage in pro-cyclical policies. We live in a different world than we did 2 decades ago. It is imperative that multilateral institutions adapt to these new realities. I hope my brief remarks will have pointed the way to how that might best be done. Thank you.
Thank you, Dr. Stiglitz. Professor Rogoff, you're now recognized for 5 minutes.
Thank you very much for the honor of speaking to this subcommittee, and I'm following a number of excellent remarks and excellent points. As the only truly global multilateral financial institution, the International Monetary Fund is needed today as much as ever. The fund's activities have multiple facets. These include its essential surveillance activities, including macroeconomic and financial forecasts for the entire world. Unlike private sector forecasts, the fund's work is distributed for free, and it's highly valued, especially in poorer countries where there are few alternatives. The fund is also a reservoir of global macroeconomic and financial data, again, made widely available. They have made major steps forward, also the World Bank, in work on debt reporting transparency, which had been a weakness in the run-up to 2008 and is now a growing strength. This includes, importantly, increased transparency over China's massive lending activities. The fund's single most important and unique activity is its role in lending to debt-distressed economies. Although best known for programs in emerging markets and lower-income countries, the fund played a large role in the European debt crisis over the last decade. Not as new as one might think, the UK alone had 11 IMF programs from 1950 to 1970. Today, the focus is shifting again as the search for yield has allowed many lower middle-income countries and developing economies that once relied exclusively on official and concessional lending to access private markets. Unfortunately, the situation has now become dire for these newer borrowers, with over 60% of lower-income countries in debt distress, and a handful of emerging markets, including Argentina and Lebanon, already in default. If US interest rates were to rise more sharply than markets, perhaps naively, think, this could cause problems in many more emerging markets. Turkey is going to be a problem regardless. True, many emerging markets have become more resilient thanks to more in foreign exchange reserves and a marked shift to borrowing in local currency and, more importantly, under domestic debtor country legal jurisdiction. This gives governments considerably more agency over debt workouts, should they be needed, with foreign creditors. I have been arguing for this change for over 3 decades. Nevertheless, a sufficient rise in global interest rates will place stress even on many of these borrowers as well, because there's still massive emerging market corporate foreign borrowing in dollars or euros under New York and London law. Let me conclude with 4 points. First, The fund is a revolving credit agency with loans that typically need to be paid within 2 to 4 years. It can forgive loans, but only if its main hard currency shareholders stand ready to replenish its resources. Second, the fund is at its best when it plays the role of the honest broker, whether in its routine forecasts and policy advice or its design of bailout programs. Sometimes, however, the most realistic advice is that a country needs to restructure its private debts, but the fund is not legally allowed to specify that. Its only tool is avoid lending into situations it deems unsustainable, but it often gets gamed into making excessively optimistic forecasts about growth and compliance. This happened yet again in Argentina, and it's a serious risk going forward in trying to exit pandemic-era loans. In general, advanced countries must be prepared to make vastly larger aid programs, outright grants, not loans, than currently envisioned. And here I certainly agree with many of the other speakers. The 2 emergency SDR issuances during the global financial crisis and again during the pandemic, on balance, made sense. Plans to reallocate a large share to poor countries, or some share if successful, is welcome. But SDR allocations are far too crude an instrument to be used as a routine aid instrument. And one of their main advantages, lack of transparency to shareholder taxpayers, will inevitably get stripped away if used too routinely. Lastly, the problem of helping developing countries control their carbon footprint as they develop is probably beyond the scale and expertise of either the IMF and the World Bank, but they can play a supporting role. I believe there's a case for creating and funding a World Carbon Bank to help countries, for example, phase out coal plants and facilitate transfer of technology. Thank you very much for the opportunity to address the subcommittee.
Thank you very much, Dr. Rogoff. I now recognize myself for 5 minutes of questions. I want to devote my 5 minutes to an issue where I find I part company with my Republican friends. A great discussion, and I usually agree with my Republican friends on all sorts of things. It might be the balance between austerity and sustainability, SDRs. I am just so puzzled, though, by the fact that every hearing of this committee begins with an indictment of those financial institutions which are addressing what, as Ms. Segal pointed out, Swiss Re deems to be the, quote, biggest long-term threat to global economy. It particularly surprises me because when we're talking about the National Flood Insurance Program, when it's taxpayer dollars that are on the hook, my Republican friends urge caution and a very, very thoughtful evaluation of risk so that we're not underwriting projects that don't make sense from a coastal risk standpoint. So I want to explore that a little bit. And Ms. Segal, you brought forward Swiss Re. Swiss Re, of course, a global insurance company. I'll say it again. They say that climate change is the biggest long-term threat to the global economy. Ms. Segal, in a minute or two, make the case and give an example of how the IMF might, were it to completely ignore the risks associated with climate change, where it could take risk that would ultimately damage both the lender, the IMF here, and the borrower.
Thank you, Chairman, for the question. So, and I appreciate that you pulled out that the reference that I made to Swiss Re, because I think the important point here, that's a private sector entity making that claim. And I also included in there the Financial Stability Board. The point being that the world is taking on climate change as an economic risk in their operations. There's basically no escape from the fact that there are economic consequences to climate change. And the actors in the global economy are making those adjustments. So for the IMF to not be paying attention to climate as a macro critical issue and to not reflect that in its surveillance activities and to not kind of move in the same direction where appropriate in its lending activities would basically make the institution irrelevant in this issue.
So Ms. Segal, bring this home for the layperson watching. Give us an example you know, if my Republican friend's philosophy prevailed and the IMF made loans and undertook its activities without any consideration of what Swiss Re is calling the biggest long-term risk to the economy, what would be something that the IMF might do that could ultimately prove catastrophic? Just give us a real-world example.
Well, it's precisely the case that that Professor Rogoff made, that it is a lending institution with revolving resources. It has to be repaid. So if it is in the business of making loans to countries whose economic stability is undermined because of climate change, so let's take a large carbon energy source exporter. If the financial viability of that economy is dependent on a resource that is suddenly unviable, nobody is wanting to buy those carbon intensive resources, that actually leaves the fund on the hook with a very bad credit. So that's kind of a single example, but to the extent climate change is just a pervasive issue.
And sorry to interrupt, Ms. Segal, but thank you for that specific example. But yeah, not just the fund, and at the end of the day, 17% of that is our money, but also the country that borrowed the money. The country that borrowed the money is now in a terrible place because they've built an asset without any consideration of what that asset might look like 20 years down the road. An immense amount of pain to the borrower as well, correct?
Yeah, and that's probably a more concise and a better example to give. But it's the fact that these risks are kind of impacting every economic actor. To ignore them would actually be at our own peril.
Thank you. Dr. Rogoff, I read carefully what you said here in your testimony, that the problem of helping developing countries control their carbon footprint is beyond the scale and expertise of the IMF. I hope that's not true, but let's stipulate that that's true. If Swiss Re is right, and this is the single biggest long-term threat to the global economy, at a minimum, don't you believe, I'll ask you to sort of think of yourself as a board member of the IMF or of a financial institution, don't you believe that it should be at the very core of the IMF or any financial risk institution to take into account projections of risk associated with climate change?
Well, as far as I know, the IMF has made a big point of saying they don't see an end game to this without a carbon tax, a global carbon tax, by the way, as being really the number one thing that needs to be done. But yes, the question is, do they have the expertise? Do you give them the funding? And I think it's an interesting question about the STR. That question's been raised. How do you give aid? There needs to be massive amounts of aid. I don't really think the IMF and the World Bank are ideally tuned to do that. But yes, it's certainly good to shame Japan if they use a lot.
Dr. Rogoff, I'm out of time. My question was actually whether they should incorporate future risk associated into their underwriting decisions. That was all I was asking.
I mean, I think that's questionable whether that should be, 40 years from now, they're not going to be able to repay and they'll keep rolling over the debt. I mean, I'm totally on board for fighting climate change. I find that argument a bit of a stretch.
Okay, thank you. I'm well over time, so I now recognize the distinguished ranking member for 5 minutes of questions.
I thank the chairman, and I wish I had time to get into this climate change. I would just climate change issue at the IMF. I would just say one thing, one editorial comment. I appreciate the chairman's focus on that. I just would say that it's difficult to just make the assumption that lending into a carbon-intensive industry is actually counterproductive to the fight on climate change, when lending could in fact provide capital to companies that have the expertise to make investments in technology and innovation that actually could fight climate change, harness carbon cycle, and innovate in carbon capture and things like that. So starving energy companies of capital or starving countries of capital that are engaging in investments in fossil energy could actually have a counterproductive effect in terms of fighting climate change. But that, I don't have time to go into that. Let me talk about economic reforms and conditionality, because I think that's very important when we talk about the role of the IMF. And the primary role, one of the primary roles of the IMF is to drive meaningful pro-growth economic reform. These economic reforms associated with IMF lending help struggling economies prosper in the long run, not just because of the funds loaned directly agree. And
Mr. Barr, let me ask you to suspend. Your last 20 seconds I could not hear. Could the other members of the committee hear Mr. Barr? Okay, I'm seeing shaking heads. I'm going to ask the staff to run the timer back 20, 25 seconds or so. Sorry, Mr. Barr, you just cut out. I think you may want to try again. You might want to back it up about 20 seconds or so.
thank you, Mr. Chairman. I apologize. There was a call coming into my phone, and I'm using my phone because I was having technical problems. So thanks for the additional time. I will restate my question. One of the primary roles of the IMF is to drive meaningful pro-growth economic reform. The economic reforms associated with IMF lending help struggling economies prosper in the long run, not just because of the funds loaned directly from the IMF, but because they have a catalytic effect that provides private creditors the confidence to lend into a particular economy. This private credit in turn amplifies the capital pledged by the IMF. Put another way, absent concrete economic reforms, private lenders will be hesitant to invest in struggling economies. So, Professor Rogoff, do you agree? And can you elaborate why economic reforms and this idea of conditionality is important when the IMF is negotiating these loans, especially as it relates to the long-term growth and recovery of struggling economies?
Thank you. Well, for starters, when we're talking about the really poor countries of the world and some that are most distressed now, they need aid. They don't need any sort of loans, although they also need technical assistance and help. But if you get into the larger emerging markets, there's a lot of Chinese money, there's a lot of private money. And when the IMF comes in, it's often because these other lenders have dried up. They're not giving money. The quote unquote austerity of many IMF programs, and I don't argue that they can be designed better in some cases, but it's coming with or without the IMF. That seems to be little understood. The IMF in these cases mitigates austerity. But I think a big problem, and many speakers have alluded to this, Professor Stiglitz did and others, is that the IMF is legally restricted from saying this ain't going to work. We could give you money, but it's not going to work. It's not realistic in the growth. It's not realistic in the compliance. You need to get rid of some of this debt first. And they're not allowed to say that. That's sort of a problem with the current structure. Thank you.
Well, thank you for that. Let me talk about surcharges. Some of my colleagues on the other side, including several on this committee, sent a letter last month to Secretary Yellen that labeled IMF's surcharge policy, quote, unfair and counterproductive. They called for these surcharges to be abolished. However, according to media reports, the Biden administration has rejected these Democrats' requests, citing the importance of surcharges for the IMF's precautionary balances. To any of the witnesses, why are surcharges important for the IMF, and why might the Treasury Department have opposed their elimination? Professor Rogoff, can you comment on that?
I mean, I think after the pandemic, there is a real question of, what they should have done something different with the surcharges. I'm not talking about Argentina, but some of the other countries, because the idea is not just to help the IMF's balances, but to encourage countries to repay because it's revolving credit. But the pandemic was truly an extraordinary situation, and to the extent it affects some of the poorest countries, I think there's an issue there. But as a routine matter, I mean, believe me, the surcharges that China's charging and that the private creditors charging are far greater.
Speaking of China,
add to that, the IMF's own economic model specifies that they do not need the surcharges for their precautionary balances. And it's a really tiny amount relative to the capital base and the lending program of the IMF.
Well, let me shift back, Professor, excuse me, let me shift back to China. In the past, some have argued China needed greater influence at places like the IMF so that it would commit itself to international norms. But in 2015, for example, China's shareholding at the fund was increased, and the IMF decided to include the renminbi in the fund's elite currency basket. But Beijing went on to wage genocide in Xinjiang, tore up its treaty obligations in Hong Kong, tightened its grip on the central bank, all while continuing its opaque Belt and Road lending. Professor Rogoff, given these facts, why should Congress listen the next time someone argues that China needs a stronger voice at the IMF? How can we better hold China accountable?
Well, this is a very difficult question. I think back in 2015, there was sort of hope for another trajectory. We depend on China to be a big lender. We hope that they'll give more money. We want to bring them in, but this is a very complex issue. I don't think the IMF can necessarily take the lead on this, but things are rapidly moving if you look at the governance in China.
The gentleman's time has expired.
Thank you, Mr.
The chairwoman, Mrs. Waters, is recognized for 5 minutes of questions.
Thank you very much. I'd like to direct my question to any of the witnesses who would like to respond to it. This is where the AMF draws the line on the question of respecting a country's sovereignty. The IMF has adopted a policy by means of a legal opinion that it will not take political considerations into account in determining a country's eligibility for assistance. The IMF, as well as the World Bank, has used this political clause as justification, for example, of not insisting that a country adopt internationally recognized core labor standards, as the fund views these standards, such as freedom of association, as an interference in the political affairs of a country. On the other hand, both the IMF and the World Bank have consistently intervened in a country's labor market policies by encouraging labor market flexibility, a euphemism for policies that make it easier for firms to fire workers and dilute the power of unions to negotiate on behalf of workers. But people like Stanley Fischer, the former first deputy managing director at the IMF, has candidly acknowledged that there are limits to political tolerance, noting a country such as Nazi Germany would not, on political grounds, have been eligible for IMF assistance. So I would appreciate hearing the views of any of our witnesses on this issue. Where is the line drawn between a government's sovereignty and the fund's macroeconomic and fiscal mandates, and with respect to labor rights, human rights, or crimes against humanity? Who would like to?
If you allow me, Chairman Himes, so I would like to respond to this question by Chairwoman Waters. I certainly agree with you that the IMF needs to be respectful of country sovereignties. I think it is clear that the institution should not be interfering politically in actually sovereign countries. But the question is, the IMF has, as a former board member, I can say that the IMF has the obligation to advise whenever there is a decision, whether it's political or any type of decision that has some incidence on the macro stability of the country. If, for instance, actually those issues about labor standards have a macroeconomic effect that may actually jeopardize a macroeconomic stability, the IMF has a duty to intervene. But certainly there is something that is important that we need to keep in, that the institution to be effective has to be rule-based. And I think this is also actually a response to the previous question by Ranking Member Barr. If China has received and enjoy an increased quota share, it is because, according to the IMF rule, there is a need whenever a country actually has an increasing economic relative economic size in the global economy to benefit from additional quota share. And even regardless of that, at the IMF, China is still underrepresented. So it is to say that it is important to make sure that the IMF is rule-based and to be respectful of the country's sovereignty.
Would anyone else like to weigh in on that?
Yeah. Can I say just, I want to second the point about the importance of a rules-based international order. And part of that rules-based international order is we have a set of international conventions, agreements like against child labor, the core labor standards. And I think adherence to those standards are actually part of the safeguards that are put into most of the lending of the multilateral financial institutions. They sometimes have not implemented them effectively, and there's been particular problems at the IFC and in some of the more private sector oriented where they have not adequately respected labor standards and the right to collective bargaining. And obviously, I think they should be more forceful in recognizing those international standards.
Well, so, can we agree that the IMF does respect sovereignty, but there are some conditions that should be adhered to, and this may be considered interference, but it's not absolute that there's no interference based on the criteria that has been developed to be eligible. Is that something that maybe we can conclude?
Yeah, I hope so. It's the framework that Dr. Sembene put. We're trying to create a rules-based rule of law internationally, and both with respect to raising funds, voting rights, and for labor standards.
Thank you, Mr. Himes.
The gentlelady's time has expired. Just so the committee and the witnesses know, it looks like we've got time and a number of members consistent with a second round of questioning. I think I'll have to be a little sharper on the gavel if we're going to do that. I've been pretty lax in these last couple of questions, so I'm going to be a little sharper on the gavel around the 5 minutes with the intention of doing a second round of questioning. With that, the gentleman from Texas, Mr. Sessions, is recognized for 5 minutes.
Mr. Chairman, thank you very much. And to our witnesses, I find each of your testimonies very instructive to us as members to hear your ideas and appreciate and respect those. My questions essentially revolve around exactly where our ranking member, the gentleman from Kentucky, came from. I have some bit of association and knowledge about Millennium Challenge Corporation, which is also a billion-dollar organization, not as large as the IMF. They have characteristics about them that, much like the IMF does, to make sure that there are people who qualify and under what circumstances, and we look at that up to and including corruption indicators, values related to gender, non-discrimination, as well as how they look up to people to build women and women's rights. I think what I see and hear from this is a similar question, but would be really related to, and I don't know how many of our witnesses, I don't know if this is a fair question, is what I'm saying, how much money is really going out directly related to what I might call climate change, other circumstances. I don't think it's appropriate for us to look at the IMF as necessarily, I think they could include a thought process when we engage a particular country for them to include their needs-based answers in their applications. But I wonder how much money is really going out and other funds that are asking the same questions that we are, as opposed to us looking at the IMF fund and what our characteristics and models should be. So it's a question to any of the participants that are witnesses today. How big are all these funds that are going, and is there someone else that really should be doing necessarily related to global changes that with economics and related to climate change?
If I could take that question
yes,
first.
Yes, ma'am. Thank you.
Sure. And in my written testimony and also my oral comments, I really put the focus on the fund's role with regard to climate on its surveillance activities. And so the short answer is, I believe surveillance is where the fund can actually be most effective. Its ability to monitor both at the country level and then tie it back to how it affects the multilateral system. That's where I think the fund can add the most value. There are efforts to kind of experiment, and the RST is one of them, to recognize climate as a macrocritical issue and see where the fund can help mobilize funding from institutions and the private sector toward climate ends. I think that's an additional role that the fund could play, but per your question, I would really put the focus on the fund's work here in the surveillance area.
Others?
May I add something to this question?
Yes, sir.
Thank you. Thank you, Congressman. I would remind that the IMF is in the process of putting in place what it calls the Resilience and Sustainability Trust, But this is going to be a $50 billion trust based on the SDRs that will be rechanneled to the IMF. And let me tell you, if you want to look at the impact on climate change at the world, at the global level, I would believe that would be minimal because of the amount that we are talking about, because of course of the size of this trust. But it is going to be important for those eligible countries, whether they are low-income countries or middle-income countries, to benefit from that resources. And I will tell you why quickly, because most of those countries, and I'm actually from one of those countries, they are facing calamities that are actually extraordinary and that are having a large incidence on their budget. There is coastal erosion, there are droughts, there are flooding, there are, I guess, everything that you can imagine that is actually a ramification of climate change. So by receiving some support from the IMF and whatever other funds that takes care of climate change, they certainly would actually have some sort of relief. But at the global level, of course, this will be quite limited. The impact will be quite limited because these countries, low-income countries and middle-income countries, actually are little and small polluters, and they certainly do not contribute much to global pollution.
Dr. Rogoff?
If I could just add very briefly.
Go ahead.
I'm sorry, Professor?
Yeah, if I could just add very briefly, just to repeat,
Yes, ma'am.
the fund, the RST fund, it's too small. It's limited to debt, which is a mistake. It should be grants, and it should be available to all countries, and it should be much, much larger based on the climate adaptation and mitigation needs.
So I would just second the point. We need much more money. I don't think it should go through the SDR myself. And I would point, if we want to stop pollution, look at the coal burning plants in Asia and try to figure out how to phase those out faster, share technology. I think the funds involved in coaxing countries and helping them do this are vast, much bigger than we've been talking about. But I think we need to start talking about it.
Mr. Chairman, once again, you've seen that your witnesses that you and Mr. Barr put together have provided, I think, positive references and indications. And I appreciate this hearing, and I appreciate the witnesses, and you're making this such an available hearing. I yield back my time, Mr. Chairman.
Thank you, Mr. Sessions. The gentleman's time's expired. The gentleman from Guam, Mr. San Nicolas, is recognized for 5 minutes.
Thank you, Mr. Chairman. Greetings, Madam Chair, and hello to my colleagues, and thank you to the witnesses who are testifying before us today. I really appreciate the big picture approach and the conversations that we're having. I'm particularly keen on the conversation about climate change, and I would like to focus my lens a little bit more on the impact of climate change with respect to the region that I represent in the South Pacific. To the south of Guam, we have several small island countries, the Republic of Palau, the Federated States of Micronesia, and the Republic of the Marshall Islands. And these small countries enjoy a unique relationship with the United States through the Compact of Free Association and the treaty that represents. These small countries would not have a dramatic effect on the overall economy as they suffer through climate change. I mean, that's just the reality. They don't play big roles in international trade or international finance. But the reality of climate change in those types of communities is catastrophic. When you look at what they're going through, I mean, the Republic of the Marshall Islands, for example, the recent king tides that swept through there was literally having waters washing over entire atolls of that particular country. The IMF, of course, focuses on big picture issues and big picture solutions. But when we have climate change impacting these smaller nations and the access of resources or to resources to address the climate change impact is far more limited for these smaller nations, I really sit back and ask myself, what more can we be doing to help them mitigate the impacts of climate change, whether or not we're going to be able to actually offset it by attacking the issue in the much larger contributors to the problem. And so I wanted to ask the witnesses present, do we believe or do you believe that the IMF should tailor specific climate change resiliency support to these smaller nations? And if so, how do you think we should structure those types of support? I'll go ahead and start with Mr. Sembene.
Thank you very much, Congressman. I fully agree with my co-panelists that the 50 billion that is going to be channeled to the IMF to help fight climate change and, of course, pandemics will be quite small. But I actually think that there are two things that we can do to make sure that actually the work of the IMF is effective in helping the global community fight climate change. First of all, we have, especially the US has, and other large shareholders, have to make sure that the IMF handles and manages these resources in the most effective way by partnering with other multilateral development banks, starting with the World Bank, to make sure that they can take advantage of their expertise to fight climate change. That's for one. The second issue is we're talking about 50 billion. But don't you forget that the G20 members have accumulated more than 440 billion out of the SDR allocation of 650 billion. So we are talking about money that is sitting there at the IMF, not serving any purpose. Why wouldn't the G20 accept, on top of the 100 billion that it has pledged to recycle, to add actually all that unused SDRs in the IMF to allocate it to the fight of climate change? I think that would be the best way and the most effective way to mobilize more resources, and not necessarily actually through the IMF. It can go through the World Bank, it can go through regional development bank like IDB or the African Development Bank, but I think that would be the most effective way to mobilize more meaningful resources for the fight against climate change. Thank you.
Can I add one more thing to that? I think the point that has just been made that while a little money to these small countries can make a very big difference to those countries, from a global point of view, it's not a lot of money. I want to make two other comments very briefly. One of them is the SDRs are not a perfect instrument, but they're an instrument that we have. And there is an urgency, particularly in some of these islands, for taking actions very quickly. Yes. So that's why I support this annual issuance of SDRs in amount $200, $300 billion a year that would make a very big difference, even if it is not perfectly targeted. Over the long run, I really strongly agree with our colleague Ken Rogoff that we need a global institution to focus on climate change. But that's not going to happen overnight. We need to have more grants, not loans. But until we get these better designed institutions, let's use the institutions, the instruments that we have to make sure that these countries are not devastated.
Thank you, Mr. Chairman. My time's expired. I yield back.
The gentleman's time's expired. The gentleman from Texas, Mr. Williams, is recognized for 5 minutes.
Thank you, Mr. Chairman. China isn't transparent. It cannot be trusted with much of the information they share with the world. We saw this with COVID-19 and their reluctance to allow any international body to come in and get to the bottom of the origins of the pandemic. They take a similar posture to the world with some of their lending practices, which are also often hidden and obscured. If China is willing to offer money to troubled economies and trap them into debt with little transparency to the outside world, then the IMF really is no longer the true lender of last resort. So, Professor Rogoff, what pressure points do we have at our disposal so we can get greater transparency into China's lending practices?
Well, there really has been some significant progress on that in the last couple of years. In getting more transparency about the Chinese loan, particularly in work from the World Bank. That said, now that we have the greater transparency, we see that they're lending at private sector terms. They are not writing down debt when they lend into a really poor country and it's in deep distress. They just roll it over, you pay a penalty interest, and it's not really resolved. This is a huge unresolved problem. Certainly in the IMF in designing aid, loans, anything, a big concern is to make sure that it's not used to give the Chinese more favorable conditions than certainly the funds getting in the World Bank and other official creditors. And you can start by providing transparency, but I think where the Chinese will run into trouble, and we have over the years, is everybody's your friend when you're lending the money in and you're building the Belt and Road project and giving loans, often a lot of corruption mixed in, by the way. But then when you want to get it back, you find your leverage is much less.
Well, that's right. And of course, China invests to get these people indebted to them. The more the IMF involves itself in the politics of climate change, the less credibility I believe it gives them around the globe. We saw how they adjusted the economic forecasts of Brazil and Japan for climate-related measures while turning a blind eye to some of the worst polluters in the world like China. We've mentioned some others today. Now, their actions are obviously not driven by the facts on the ground, but rather to carry out a political agenda. So again, Professor Rogoff, can you talk about some of the negative consequences if the IMF continues to operate outside of its mission and it gets involved in this unrelated task called climate change?
I mean, I don't have any problem with the IMF keeping a scorecard the way it provides other data. I think the International Energy Agency has, much more expertise generally in the area, although they're not really a global institution in the way that the IMF is. The IMF can use it. I think they can do that. I don't want to apologize exactly for the IMF, but I would say that since this is new, it's not exactly easy to decide exactly how to calibrate the advice and what they should say, and there's not a lot of precedent. So I hesitate to, destroy the whole idea of saying something about climate because maybe they fumbled in a couple cases.
Okay. Elizabeth Warren and Bernie Sanders, we've all heard of them, have called for an additional $2 trillion in special drawing rights for the IMF to deal with poverty, hunger, and disease across the world. This massive increase in funding would seem to be outside of the normal bounds of the IMF and more in line with some other international institutions' purview. So, Professor Rogoff, can you elaborate on why the IMF would not be the appropriate institution to try to deal with some of these broad humanitarian goals? Can you hear me?
Sorry for my fumbling. Well, I mean, I just think the World Bank, if you had, for starters, has more in this area. The SDR is housed in the IMF. I think it's possible, it was been mentioned by one of the other speakers, that you could issue the money through the IMF and have it, dispensed by the World Bank. But I think it's a very crude instrument, and I think we need to do something now about having something more focused. And I do worry it's a distraction from the IMF's central focus. It's hard to be both an aid agency and the revolving lender. People say, well, they can do both. I think that's actually very hard.
Okay. I yield my time back, Mr. Chairman. Thank you.
Gentleman's time has expired. The gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes.
Thank you, Mr. Chairman. And you yourself and the ranking member have put together really a distinguished panel here, and I'm grateful for the testimony of all of our witnesses and your willingness to lend your considerable talents to helping the committee do its work. I want to try to address something that I think might be, I might be wrong, but might be more workable in the near term. Professor Ghosh, we got into this issue about surcharges on so-called middle-income countries, and just to be clear, we're talking about Ukraine, we're talking about Egypt, Argentina, Brazil. There hasn't been any relief for those countries in terms of the surcharges that have been applied by the IMF, and I am told that during the period of this pandemic, there'll be about $4 billion paid by these countries to the IMF in terms of surcharge fees. And, forgive me, but it would seem that it would be reasonable just during this interregnum, during this period that we're dealing with this pandemic. And all of these countries, I think, have about 25 to 30% of their population vaccinated. So they're, 2/3 of the country is not. They're struggling, and they're asking in many cases just for a pause in the application of these surcharges. Would it not be reasonable to ask the IMF, and I know about the revolving fund nature of this, I understand that, and I appreciate that, but given the circumstances, would this not be an opportunity for us to show a little bit of reasonableness and sensitivity to these situations, to suspend for the short term? We seem to be coming out of this pandemic eventually, hopefully. Couldn't we suspend that without upsetting the balance of the IMF?
Thank you for this question, and you're absolutely right. I absolutely agree with you. I would argue that there is really no logical reason for the surcharges. The ostensible reason is that it is to prevent countries from taking on too much debt or holding on to IMF loans for too long. But both of these are in the hands of the IMF. The IMF decides how much they're going to lend to a country, and then it punishes that country for taking too large a loan. This has nothing to do with the revolving fund. This is an additional charge, which really, even for its own operational balances, is not necessary. And it punishes countries precisely when they least need them. At the moment, Argentina is paying more on surcharges than it would to vaccinate its entire population. And this is true of a number of other countries. It's a completely unnecessary kind of imposition on countries that are very distressed and cannot afford it. So I completely agree with you. Furthermore, it's, yes, this pandemic, but we are facing major climate challenges as well. So there's really no justification for surcharges, which are punishment for decisions made by the IMF itself. And I believe they should actually
Can I
just be
add one more
abolished.
point, which is that they are not based on any actuarial basis. So they are not part of precautionary basis. They are not a repayment in anticipation of non-payment.
No.
If I
Thank
could
you,
just
Professor
jump in.
Stiglitz, and good to see you again. Please, Ms. Segal, go ahead. I'm sorry.
Thank you. Sorry to cut you off. I just wanted to say on surcharges, so they do serve a purpose for IMF operations. First, to build precautionary balances. So the IMF has a plan for achieving a precautionary balance, and surcharges are what goes to fund that. So there is a purpose there. That should be part of the analysis. And the second purpose actually is to maintain the fund as a lender of last resort. And that means that it is not kind of the cheapest source of financing there. And you wouldn't want to be in the business of encouraging countries that otherwise don't need to go to the fund to go to the fund. So there is a purpose behind the surcharges. I would say if the issue that we're really concerned about is debt, and that's been kind of a theme throughout the hearing, that's what should be dealt with in a comprehensive nature, knowing that whatever policy is decided should be kind of across the membership. So I think the discussion needs to be how Argentina and others need to deal with their debt issue and not kind of pick off surcharges as the issue to be dealt with.
If I could very quickly respond.
Very quickly, the gentleman's time has expired. Professor Ghosh, very quickly.
Yes, the issues, the IMF's own model in the World Economic Outlook specifies that surcharges are not required for its operational balances. It's actually meeting it without the surcharges. And the other issue is that, the reason China is successful in lending to so many countries and making itself attractive is because the IMF and others are becoming so expensive in many ways, in terms of the surcharges, in terms of conditions that make it very difficult to do counter-cyclical policies. So if you really want to make China less important as a global lender, we have to make these sources of multilateral lending more available and attractive.
Gentleman's time has expired. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes. Mr. Hill, you're recognized.
Thank you, Mr. Chairman, and thanks for having this hearing. And the witnesses are outstanding. I enjoyed very much reading their testimony. 2 weeks ago, Senate Democrats sent a letter to Majority Leader Schumer calling on him to support the $900 billion equivalent of special drawing rights to be included in this year's appropriations bill that passed the House on a party line vote last July. And I said this when I voted against the bill last summer, and I'll say it again. In my view, using SDRs in this manner is a mistake. Just last August, the IMF sent $500 million to the Taliban in Afghanistan as a part of its general allocation of last year's $650 billion equivalent allocation. Thanks to the efforts of Republicans on this committee, while no SDRs made it to the Taliban, $42 billion were allocated to the corrupt Chinese Communist Party, $18 billion, as you noted, Mr. Chairman, to menacing Russia poised on another invasion, $5 billion to Iran, the state sponsor of terror, $1 billion to Belarus, Putin's co-conspirator, $400 million to Assad in Syria, the mass murderer. Only in Washington can this be considered common sense. And as we've talked about today, some who advocate for SDRs as a foreign development aid tool or turning SDRs into a climate bank. Again, in my view, this is not the right way to strengthen global economic recovery and reduce global poverty. SDRs do really neither of these things. They're too blunt an instrument. SDR allocations are not targeted, tailored, or tied to COVID injury. There's no conditions for how a government can use SDRs, no accountability. They never have to be repaid. They're a blank check, as Mr. Sembene said, to wealthy nations. $440 billion, as he noted, of the $650 go to the wealthiest countries. Secondly, it's due to this allocation based solely on shareholding that I think it does not help the poorest countries. Last summer, I warned Secretary Yellen of all these issues. That advice and counsel fell on deaf ears. I suggested do a special allocation of SDRs to the poor for COVID. Get the board to agree to that, not a general allocation. Insist on concessions and guardrails in advance of the allocation. Insist that countries belong to the Paris Club, as Ms. Segal suggested. Put up transparency guardrails. Make sure you can't use SDRs for debt repayment. Make sure they can't be traded with rogue nations for hard currency. Exact these technical commitments for rechanneling SDRs in advance of that allocation. None of those things were done in writing in a committed way. And for all these reasons, that's why I've introduced the Special Drawing Rights Oversight Act, which would limit the executive branch's ability to bypass Congress to authorize SDR allocations by limiting the size and frequency of allocations unless Congress authorizes them by law. Treasury has broad authority to circumvent Congress and unilaterally approve SDR allocations. My bill would ensure that there's a proper check on the executive and provide greater accountability to Congress. It's time to stop providing a blank check to our adversaries and a non-rules-based approach to SDRs that are unaccountable and untargeted. Let's be strategic and smart in the use of this very valuable reserve asset. And has been noted by Ranking Member Barr, SDRs is just one of the challenges at the fund. Because I agree with this conversation that Ken Rogoff highlighted in his written testimony, that the SDRs is just one small issue. What's the role of the IMF in 2022 and beyond? Historically, we are seeing the IMF use its surveillance to monitor the stability of the international financial system, while the World Bank is focused on poverty reduction and sustainable development, along with the regional development banks, not the IMF. So the IMF in this hearing is facing an identity crisis. The role as traditional lender of last resort, as you noted, and Mr. Chairman, in your opening statement, has been somewhat replaced as central banks have pumped trillions of dollars into the economy. And wealthy countries, quantitative easing has made the IMF loans functionally obsolete. Really, we're seeing recommended today the IMF become a donor of first resort rather than its traditional role. In my view, we should use the U.S. position to make sure that the fund sticks to its core message. I look forward to our continued discussion, and I yield back.
Gentleman's time has expired. The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes.
Thank you, Chairman and Ranking Member. for this lively and timely hearing. The IMF's role in the world is at a turning point. If we're going to take on pandemics, climate change, and hunger successfully, we can't be stuck on the same policies of austerity that got us here. Because of the fact that our world has gotten more unequal during the COVID-19 pandemic. Here in the US, President Biden led a remarkable economic recovery based on economic stimulus. I think it can go further. But if the IMF is stuck on its old policies of austerity, the rest of the world will never recover. Professor Ghosh, last year's issuance of SDRs was a tremendous success. Dozens of countries have used them to finance their response to the pandemic. My bill supporting the issuance of $2 trillion in SDRs passed the House, and I hope we see more soon. But meanwhile, there's the IMF. Pardon me. Unfortunately, the IMF plans to attach conditionality to these recycled SDRs. What does the IMF conditionality actually mean for the world's ability to recover from this pandemic? And will it undermine our ability to get SDRs to countries that need them most?
Thank you so much for this question. And yes, I do agree with you that the last year's issuance was a success, but necessarily limited because the amounts were not sufficient for the needs. What is wonderful about the SDRs is that they are costless for the countries that receive them. And the countries that don't need them don't use them. So they do not actually have, they don't matter for the countries that don't need them. So when we say that, so much is going to those countries, it doesn't matter. It doesn't really affect global liquidity in any meaningful sense. And it's a very small part of the huge quantitative easing of 25 trillion that advanced countries have engaged in over the last decade. So if we issue 2 trillion SDRs, still a small proportion of it will go to middle income and low income countries that really do need it. But it will provide a huge buffer. The critical point is it's not debt. And what currently the RST will actually give you debt, and necessarily with debt there will be conditions because that debt will have to be repaid. It is now important, given the massive climate challenges, given all the other challenges that we have in meeting sustainable development goals, it's now crucial to provide this debt-free money to countries that don't need it. Those who don't need it will not use it, so that's fine. If we can provide this, it is debt-free, it is costless, and it provides a massive buffer even for the reserves in terms of other capital flows coming in. It enables countries to meet the challenges that are most important for them. It could be a climate adaptation challenge, it could be a health challenge, it could be whichever is the currently most important challenge that they need. And therefore, a large allocation would actually play a huge role in determining a future recovery in the global economy.
Thank you much. And to Professor Stiglitz, countries around the world owe billions of dollars to the IMF in surcharge fees, all because they have too much debt or take too long to repay. To me, this looks like the business model of payday lenders here in Chicago, not an economic development agency. We all know Ukraine is currently at risk of attack from Russia. What's more, it's only vaccinated about a third of its population, but Ukraine has to pay surcharge fees to the IMF. Professor Stiglitz, why does Ukraine, one of the poorest countries in Eastern Europe, owe surcharge fees to the IMF? And do surcharges threaten economic growth in countries like Ukraine and undermine the legitimacy of the IMF in an unstable world?
You're absolutely right. The surcharges are pro-cyclical. They go exactly against the objective of good economic policy. They are, as I pointed out in my written testimony, the IMF is supposed to help countries with foreign exchange problems. With the surcharges, they're making things worse. And our earlier discussion pointed out very forcefully that the arguments that have been put forward for the surcharges make absolutely no sense. They're not based on actuarial risk. They're not needed for building up the precautionary balances. They're not needed for the operations of the IMF. And they're not needed to stop countries from borrowing from the IMF, because the IMF has control over who borrows from the IMF. So all the arguments that have been put forward for the surcharges make absolutely no sense, and they are counterproductive.
Thank you, sir. With
The
that,
gentleman's
Mr. Chair,
time is the gentleman's time has expired. The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes.
Thank you, Chairman, and I appreciate you putting together this interesting cast of characters to cover a really important topic. And you know, I will say we've spent a lot more energy on climate than I had expected. So let me just address up front something that wasn't really in my plan to spend as much time on. But when we look at Professor Rogoff, maybe you could address what's the normal time frame for an IMF loan, and I emphasize the loan, something that's expected to be repaid.
Yeah, I mean, the normal time frame outside of a few very small programs for the lowest income countries is on the order of 2 to 4 years.
So my base question is then, in 2 to 4 years, I mean, when I look at the really, really aggressive climate change models, we're talking about sea levels rising at less than a centimeter a year. So you really think that in 2 to 4 years, we're going to see something so catastrophic that the risk can't possibly be conceptualized or underwritten?
I mean, certainly the private sector looks at that. If I can just make one other point, there have been complaints about the IMF putting in conditionality. The Chinese lend at much higher rates than the IMF does. Why does everyone love the Chinese lending? Because there's no conditionality on corruption and things like that. They have not been party to the Paris Club agreements or any of the things. And I think you cannot look at what the IMF's doing without looking at what China's doing at the same time.
Yeah, thank you for that. And it's a nice pivot to the core topic. So, the reality is, of course, people can understand and assess risk in that short time horizon, even if you take the most aggressive models. So, I think we could just focus on the loans being what they are. They're loans, and the idea that to the chairman's point, that somehow this poses some systemic risk to the IMF is a fallacy. You may say that climate change does pose a systemic risk to the planet if you believe the most aggressive models. But the idea that the IMF or anyone else lending in a 2 to 4 year time horizon couldn't take that into account, to me, is a fallacious argument. But, Mr. Rogoff, last year I introduced my bill, the Chinese Currency Accountability Act, and this bill would make any increase in the Chinese RMB's weighting in the IMF's special drawing rights currency basket conditional on Treasury certifying that China is complying with key provisions of the IMF's Articles of Agreement, the Paris Club, and OECD arrangement on officially supported export credits. I think it's essential for the United States to do more to combat the Belt and Road Initiative by taking actions such as this and features that you highlight that are important in IMF that aren't embedded in the way the Chinese lens. So do you believe this approach could be effective in forcing China to become more transparent or to maybe alter their terms in their own lending programs?
Well, I think Dr. Sembene said very well that, and Professor Stiglitz as well, that we're trying to have rules of the international system, and China's gotten really big for its share in the IMF. It kind of doesn't even make any sense. It's still way too small. So I'm not sure how we say no. We've been begging them to increase their quota, actually. The Chinese have been resisting it because they don't want to be responsible for what the IMF is doing. They like keeping a low profile and doing their own thing. So, we're trying to bring them into the tent in our rules in this situation.
Yeah, thanks for highlighting that. And I think that's it. They're working on an entirely different and alternative architecture that is ripe with corruption, and it purely pursues China's national interest. In fact, China has flaunted their agreement with many of the same countries that are part of the IMF, the World Trade Organization. They've never, become an actual market economy. They're a state-sponsored economy. And I want to highlight, Professor Ghosh, at least you're transparent and essentially wanting to turn the IMF into a big global charity. And I think you also touched on something that's really important. in saying, look at the rate of quantitative easing, which is, a word for debasing the currency. Look at the global West. How dare we put such vigorous terms and conditions on people who are essentially doing the same things that the wealthiest countries in the world are doing? So far from austerity, we've debased our currencies globally to the tune of $25 to $30 trillion. Shame on us. And I yield.
The gentleman's time has expired. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our witnesses for appearing before this subcommittee today. We find ourselves in the third year of this pandemic that has laid bare the deadly consequences of weak investments in our global public health infrastructure and so much more. Over 5 million people have died globally from COVID-19, including nearly 1 million people here in the United States. Our country may be on track towards recovery, but many developing countries are still struggling due to the long legacy of colonialism, unsustainable debt, and IMF surcharges. The IMF surcharges policy, which imposes extra, often hidden fees onto countries with high levels of debt, has been widely denounced as an unjust burden and a hindrance to our global economic recovery by development experts and civil society organizations. Dr. Ghosh, what are the impacts of surcharges on developing countries that are already burdened by unsustainable debt?
Thank you so much for this question. And yes, you're absolutely right. These are surcharges that are imposed on countries that are already in distress, that already do not have the foreign exchange that they need for basic imports, that are unable to meet the critical health spending that they need in the pandemic. And now they're forced to pay more than they would normally, or that other debtors are repaying the IMF, simply because the IMF has this particular rule. It is deeply unjust and unjustified as well, as Professor Stiglitz has already pointed out. But the economic impact is actually quite brutal. It requires the budget to be set aside for this repayment. It requires a further drain on very, very limited foreign exchange resources that prevent you from importing essential goods, that prevent you from doing anything for poverty alleviation and for just coping with the pandemic and all the livelihood losses. And it is deeply pro-cyclical, as Professor Stiglitz has already mentioned. So it can make a downturn even worse. There is absolutely no justification for the surcharges, and they really are a big damage to the developing countries that have to pay them.
May I add something to this?
Yes, please.
Yeah. All right, thank you very much, Congresswoman. We can agree or disagree on whether surcharges are good from an ethical and moral standpoint. We can agree and disagree. But I think what matters also is actually from a fiscal standpoint. If surcharges actually compound and aggravate the liquidity issues that countries are facing, so that they are having issues to service their debt. That's where actually the problem is. So I'm saying that because we just had the debt service suspension initiative that was put in place by the G20 expire in December, and so far we don't have any alternative mechanism.
Thank you. I'm going to run out of time here, but I appreciate those answers there. And there was a recent report that reported that Argentina will spend more than $3 billion covering surcharges through 2023. I want us to sit with that. That is 9 times the amount it would cost to vaccinate every single Argentinian against COVID-19. Dr. Ghosh, several governments have called for the suspension of these surcharges for the duration of the pandemic. Yes or no? Given the urgency, do you agree that there should be an immediate review of surcharge policy?
Absolutely. I believe that right now in the continuing pandemic, there should absolutely be a review. I believe the IMF should actually cancel this program altogether because it really does not make sense and it is not justified. But I believe the US government should actively propose this.
And Dr. Stiglitz, do you agree with arguments in support of the IMF surcharge policy claiming they offset the risk of non-repayment? Why or why not?
The risk of non-repayment is minuscule. The number of loans that have not been repaid is very small because the IMF has what is called preferred creditor status. They almost always get repaid. And so the idea that these are important for precautionary balances are based on actuarial risk is nonsense. So especially in the midst of this pandemic, they ought to be suspended. But as Professor Ghosh pointed out, there's no basis for them as part of the long-term framework because they are pro-cyclical and they countervene the basic role of the IMF in helping countries with foreign exchange problems.
Thank you. And Dr. Stiglitz, what is standing in the way of the elimination of this onerous surcharge policy, and how can Congress work towards achieving that goal?
Well, I think there's a lot of support among many other countries. The United States is one of the countries standing in the way right now, unfortunately.
Well, indeed, surcharges are an obstacle to our global economic recovery and our efforts to end this pandemic. And I agree, they should be abolished. It is also alarming to see the IMF continue to support austerity measures in many of its lending programs during the pandemic. The consequences have been deadly in Ecuador. We saw how IMF-backed austerity cuts contributed to one of the deadliest outbreaks of COVID-19 worldwide. Dr. Ghosh, how might IMF...
I'm sorry, the gentlelady's time has expired.
All right, and I yield. Thank you.
And we will go immediately into the second round. We have reduced the number of members. We do have an administrative hard stop in just over half an hour. So just a fair warning to my colleagues, I will be particularly aggressive on the gavel at the 5-minute mark. So please do that so that we can get to everybody in the second round. With that, I will very quickly recognize myself for 5 minutes of questions. And I just want to cap off the this surcharge debate. It's been really interesting, very good. What I haven't heard is an affirmative defense of surcharges. Dr. Rogoff, I did hear you say that they were lower. The surcharges are considerably lower than one would experience in the private sector. That's not a ringing affirmative defense, but just in the interest of analytical rigor, does anybody want to mount a affirmative defense for the existence of surcharges?
Well, I first want to say that I didn't get a chance to speak up, but I really second everything Ms. Segal said, in her last remarks about you just have to look at the whole picture. As I understand it, and Professor Stiglitz probably much more involved in discussing with the Argentines than I am, but they've arrived at a program where they're not actually making payments on any of this stuff. It's being relent, and there's going to be some big negotiation, possibly not coming, I think, till 2026, when all the loans are coming due about who gets paid what. And it's, I suspect these surcharges are going to come out of some private sector pocket or Chinese pocket, not necessarily, from the IMF. But as I said in my opening remarks, I think the pandemic clearly is a very exceptional situation. And in many cases, I could understand suspending them. The case of Europe, Ukraine and Argentina, these are countries that are, repeat. They're different, but I mean, Argentina has a profound willingness to repay problem. It would have been much better if the IMF did not give it a loan in 2018. Probably better if it hadn't given a loan, 17 years before that. But this is a piece of that, but it's not the whole picture.
Thank you, Dr. Rogoff. Ms. Segal, you were cut off when you were making comments. Again, it's made an impression on me that even Dr. Rogoff's comments just now were hardly a ringing affirmative endorsement of surcharges. So, anything to add?
Well, I would just say on the debt front, I would like for all of us to keep in mind that when the official sector steps up and provides debt relief, but doesn't insist that the private sector and other creditors do as well, it actually doesn't help the country or address the problem. It leaves the lenders of last resort kind of holding the bag without fundamentally addressing the problem. And I think we saw that with DSSI, the debt service suspension initiative, which was an excellent initiative. It was quick. It had to be done in the face of crisis. But the official sector stepped up, provided debt relief, strongly suggested to the private sector that they do the same, and they didn't. So I really think we need to think in terms of kind of what is the additionality here. And if the official sector is providing relief, it should be because private creditors are as well, and that the countries themselves are basically taking steps to go ahead and address the imbalances that led to the problem in the first place. That's kind of the tie into conditionality.
Thank you, Ms. Segal. I'm going to, in the interest of discipline, yield back the balance of my time. But I'm also really very interesting discussion. I'm going to get with the ranking member and see if we can find, given what we've heard all today, some proposal that would at least make the situation around surcharges better. With that, I will yield the balance of my time and recognize the ranking member for 5 minutes.
Thanks, Mr. Chairman, and I'll jump into this discussion on surcharges and maybe try to mount defense of some of the surcharges, but invite other ideas and feedback on it. I mean, obviously, what the purpose of the surcharges is risk management and contributions to the fund's precautionary balances. And I invite the witnesses to tell me why surcharges aren't part and parcel to conditionality, and the need for conditionality to actually produce the catalytic effect we want. We want these loans to be repaid. We want to invite private capital investment. And if we simply transform the IMF into a global charity, as Mr. Davidson described, what incentive exists for private lenders to get into some of these distressed countries? I did find Professor Ghosh's argument to be interesting, something that I think we ought to consider, that that maybe Chinese lending is more attractive when surcharges are in place. But what I would offer as a counterpoint, perhaps, is shouldn't the goal not be to just waive surcharges, but rather to get more aggressive, have the IMF or demand of the IMF to be more aggressive in calling out China's opaque lending practices and its non-adherence to international credit standards? That, in my judgment, is what threatens the fund's work by saddling countries with unsustainable debt. If China's opaque lending standards and Belt and Road gets these countries into trouble, it will place greater pressure on the IMF. So rather than waiving the surcharges, wouldn't it be better if the United States and other members of the governance of the IMF demand greater accountability of China and greater debt transparency as a means of holding China accountable, and also helping these countries that are the victims of Chinese debt trap diplomacy? And so, just with that comment, I invite feedback from Professor Ghosh or any of our witnesses.
Thank you so much, and I would be very happy to respond to that. You know, it's very difficult for the IMF to tell China who they can or cannot lend to, or to tell countries whether or not to accept Chinese loans. So what it has to do really is to say, well, we are offering you loans that are more acceptable, etc. And it's not only corruption, because let's face it, the IMF has also lent to so-called corrupt countries and governments, and China also lends to non-corrupt countries and governments. I think the Chinese lending pattern, yes, it is coming into problems of its own. The Belt and Road Initiative definitely is entering a morass, but it's of its own making. By imposing surcharges, you're not necessarily helping this at all. If anything, the fact that Pakistan has to pay all these surcharges to the IMF is causing Pakistan to approach the Chinese even more, saying, please help me, I have such a shortage of foreign exchange. And now, in addition to everything else, I have to pay these surcharges. So I do believe that the surcharges are counterproductive, even from that point of view, from the geopolitical point of view, because they are adding a burden which is unnecessary, unjustified, illogical, and does not prevent countries that have been in I mean, Pakistan has been under IMF control for almost 4 decades now.
Thank you for that, but can I reclaim my time? If we don't require anything, even of these distressed countries, in the way of conditions or economic reforms or paying a surcharge, why would private capital flow into these distressed countries?
Well, you know, Pakistan has been following IMF conditionality for 40 years, and it hasn't got the growth conditions because the IMF's own review suggests that their own strategies are such that they're over-optimistic about the growth outcomes. They impose fiscal austerity, and then they're very surprised when that gives you declining growth.
Well,
so
any of the witnesses have
the nature of the conditionalities. It's not conditionalities per se, it's the nature of the conditionalities.
Any witnesses have a different viewpoint?
I mean, I at least another viewpoint would be that Pakistan's had, the military's been incredibly powerful and corrupted the system in many ways. And I mean, many studies suggest that's why they haven't been growing. I mean, to blame it on the IMF, I think, it's a very small issue here.
Can I have
What
one?
can we do, just in the remaining time, any witness, what can we do to improve debt transparency? What can we do to support IMF, making IMF lending conditional on a country's comprehensive disclosure of Chinese debt?
Can I make
I'm sorry, the gentleman's time has expired and I do have to be disciplined. So I will, on behalf of the ranking member, invite each of our witnesses to respond to the record. I, for one, would be very interested in hearing answers to those questions, but I do need to be disciplined about the time. So let's take that for the record. And let me recognize the gentleman from Guam, Mr. San Nicolas, for 5 minutes.
Thank you, Mr. Chairman. I wanted to use my time to kind of circle back on my initial line of questioning and the point that I was trying to make. When I listened throughout the hearing at hundreds of billions of dollars in SDRs being out there, and then I go back and I look at the data on the Republic of the Marshall Islands, the Republic of Palau, the Federated States of Micronesia. Marshall Islands access $7 million in SDRs. Same for the Federated States of Micronesia and the Republic of Palau access $12 million in SDRs. Mr. Chairman, that's not even enough to pave a road in these island communities, much less build seawalls, much less harden water infrastructure, much less mitigate the impact on housing and the availability of housing in these particular areas that are becoming inundated with water as a result of the climate change that is materially happening and directly affecting these countries and presenting an existential risk. I would like to emphasize in my role here and in my time in this hearing, the need for us to really press home the point that the stability of our global financial system is not unlike the stability of our domestic financial system. We can't just provide robust funding and robust opportunities for the biggest players while we ignore rural communities here in this country and while we ignore those people who are trying to take advantage of what we're able to make available and are just not able to do so because they don't have the same means as some of the other bigger players. And that's the situation right now in our international financial situation. We have these island nations that are literally suffering directly as a result of these things, and they're not able to access the resources that we make available on a global scale. So I really would like to emphasize that the IMF to take some kind of different approach and really factor in the real-time risk profiles that are being affected by climate change and provide the financial support to these areas that are already being dramatically impacted. We can try and address the big picture, and of course, that's always going to be important, but we have real-world consequences happening right now. And for us to have hundreds of billions in SDRs out there, while these island communities are receiving $7 million in SDR support, is really just, it's a failure of the system with respect to the problem. And so I want to just emphasize that. I'll make time for any witnesses who may want to chime in, but if not, Mr. Chairman, then I will yield that.
Well, I would add, Congressman, if you allow me, that I fully agree with you. I think there is a lot of things that can be done with those unused SDR that are sitting on the account of the IMF. The main issue in my mind is we need to make sure that borrowing costs are reduced for those countries that are facing debt distress or that are on the risk of high debt distress. If we don't do that, they won't have any other choice but to go to other alternative source, be it China, be it the private sector, unfortunately, because they have to make sure that they respond to the COVID pandemic properly. They also have to make sure that they provide basic services to their population, and they also have to make sure that there is social cohesion while also doing the war on terror. So we certainly need to use those SDR to see what are the innovative way to make sure that it helps reduce borrowing costs for those countries. I think that would be the best service that we would give to those countries. Thank you.
Ms. Segal?
And I would just say it sounds like the panel and the committee for that matter is unanimous in wanting to channel more resources to deal with the issue of climate. I think where there's perhaps a difference is how those resources are channeled and through what institutions. And I would just add, if you look at the budget request for FY22, it's in the nature of 100 million or so from the US that's dedicated to the IMF and the redirecting of SDR resources, but it's more than 10 times that's dedicated to other facilities that are directed at climate issues. So I don't think there's any argument about the need to channel more resources. It's just how and to which institutions.
Can I add one thing?
Just in closing, Mr.
I think your comments highlight the importance of recycling the SDRs, that more countries need to do that recycling, and the institutional framework for doing the recycling has to be improved. As I mentioned in my report, and Professor Ghosh mentioned in her written testimony, that the current framework is not up to the task. It needs to be a much better facility and much broader. I think in the long run, in the short run, we face a real urgency because of the pandemic. In the long run, I think we ought to be thinking of the kinds of institution that Professor Rogoff talked about, which is a new international institution, a green bank of some kind. But right now, we know how long it takes to create those institutions, and in the meanwhile, we have to act, and that's why the SDR issuance and recycling of that is the intermediate solution until we get the kind of institution that Professor Rogoff talked about.
The gentleman's time has expired. The gentleman from Texas, Mr. Sessions, is recognized for 5 minutes.
Mr. Chairman, thank you very much. At this time, I do not seek time, but except I want to reinforce my thanks to this witness panel and to the wisdom of having this hearing. I yield back my time.
The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes.
Thank you, Chairman. And again, I want to add the compliments for the panel, their detailed answers, and for your engagement, and Mr. Barr as well. I do want to turn back to the role of who is in the right position to handle things like long-term structural adaptation for something as serious and long range as climate. And I just don't think it's a short-term lending, foreign exchange-based financial intermediary like the IMF. So I continue to state we shouldn't convert the IMF in either to an aid organization or into a global development organization. It is an intermediate term institution to aid companies with foreign exchange and short-term debt management challenges. And I do agree a couple of points. One was on the surveillance work of IMF. Clearly, long-term projections on surveillance as it relates to a country's intermediate, medium-term risks associated, financial risks associated with coping with climate, that's certainly a worthy use of the macroeconomic resources, analysis resources of IMF. But if climate is our real focus, then why do we treat China like a developing nation at the World Bank? Why do we keep funding no strings attached SDR issuances to giant carbon emitters like India or China or many, many other countries? That just doesn't make any sense. And that shows you the blunt incoherence of an across-the-board SDR issuance. And since it's based on shareholdings from our friend from Guam, he makes many good points for Palau and the people of the Marshall Islands, and I concur with him. And it says to me that that's, again, a development, long-term development risk strategy, not a short-term financing risk, considering their association and their financial position. So again, it's more of a development challenge. That's the World Bank. That's the regional banks. If we're concerned about climate, why aren't we pursuing former Congressman Ed Royce's strategy of building smaller nuclear reactors for Africa with 150-year life, low waste, reprocessing that generates power and gets people off fossil fuels? So I don't mean to be rhetorical, but I think that is how we should be looking at this and not burdening these sorts of structural issues with an entity not created to cope with them. I want to turn next to the issue of management at the IMF. I have to say I was so pleased that Chair Waters was very aggressive last September in talking about her concerns and describing them as very troubling, where the current CEO of the IMF, as the former CEO of the World Bank, essentially changed an economic forecast at China's request. I find that troubling. I think the IMF board should have dismissed the managing director over that. I think it was a bad move. And that mismanagement of the fund continues as recently as in December, when the first deputy managing director, Jeff Okamoto, was replaced by an academic who I don't believe has the treasury resume or the operational experience to be in the chief U.S. position at the IMF, the first deputy managing director. So I also, Mr. Chairman, have concerns about the management and operations of the IMF. I hope you and Chair Waters will consider that as a possible oversight topic as this year goes on in the Congress. Turning to an additional key point I wanted to make, and I'm so grateful for the second round, sir. Under the IMF's rules, a member country of the fund does not have to be a UN member. For example, Kosovo is not a UN member state, but has been an IMF member since 2009. Taiwan is not a UN member state, but it belongs to the WTO and the Asian Development Bank. And Taiwan, of course, is immensely larger than Kosovo. The Biden administration has called for Taiwan's meaningful participation in all international organizations. And I ask Professor Rogoff or others on the panel, shouldn't we support Taiwan's membership at the IMF just as the U.S. did with Kosovo? Let me yield to the panel.
Well, I'll take that question briefly first. I mean, good luck trying to do that. I think if we did, we might be precipitating China to withdraw. And are we actually prepared to do that?
Thank you, Mr. Chairman. I yield back the balance of my time.
Gentleman yields. The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman. I will be brief with just one question that I meant to ask Dr. Sembene. The IMF told the UN High Commission on Human Rights that as a purely economic agency, it does not, and I quote, directly engage in the promotion of human rights. But we've seen the IMF work for political reasons on many occasions, including the disastrous 2018 loan to the Macri government in Argentina. Mr. Sembene, do you agree that the IMF has played a political role in the past, and should it incorporate human rights into its work? Mr.
Sembene, I don't know if you heard the question that was directed, I think, at you by Mr. Garcia.
Who's it addressed to?
Mr. Garcia, do you want to repeat that? I'll give you the time back.
Yeah, thank you. The IMF told the UN High Commission on Human Rights that as a purely economic agency, it does not, and I quote, directly engage in the promotion of human rights. But we've seen the IMF work for political reasons on many occasions, including the disastrous 2018 loan to the Macri government of Argentina. My question to you is, do you agree that the IMF has played a political role in the past, and should it incorporate human rights into its work?
Well, let me take that. First, the boundary between economics and politics is always going to be vague, and we try to separate them. When I was at the World Bank, discussing corruption was viewed to be political, And one of the things that President Wolfenson did at the World Bank is to say, no, corruption is an economic issue. It's not a political issue. And so there was a change in the boundary to say corruption has economic consequences. My own view of the Macri loan, the 2018 loan, was that it violated many of the standard rules of the IMF. It was obviously a particularly foolish loan because they did not put on a condition that would stop the money going into the country and going out to finance private sector outflow from Argentina. So the result of that very poorly designed loan, which was, many people think, intended to help the Macri government, was the country wound up $44 billion more in debt and nothing to show for it. So that was an example. My earlier testimony, I pointed out the issue was not conditionality, but which condition? The condition they should have imposed is that you cannot use that money to finance capital outflow. And unfortunately, they didn't put that condition on.
I just want to second that that's certainly very awkward, the 2018 loan. And I don't know, what they were thinking exactly. The fund, was flush at the time and had a long relationship with Argentina, and they were trying to patch it, but it was a huge mistake. But I'll also say, if you're going to put conditions on capital outflows, that's happened a lot with money made during the pandemic. If money that Sdrs that went to Argentina, Lebanon, a lot went into capital flight. I mean, it's tricky to put those conditions on, but they just shouldn't have made the loan, not without a big write down in the private debt.
Thank you. And Mr. Sembene, it looks like you may be back. Did you hear the question? Oh, maybe we didn't get you back. Well, without further ado, Mr. Chair, I yield back.
Okay, the gentleman yields. The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes.
Thank you, Chairman. And Mr. Rogoff, I'd like to pick up where I left off. In your testimony, you stated that a number of larger emerging markets have become more resilient due to the fact that they have large reserves of foreign currency that provide them a cushion from the need for the IMF. And this makes me consider our own domestic policy and how our overspending affects inflation. We are the world's reserve currency. We're a substantial backer, the largest of the IMF. And of course, we're no longer constrained even by the amount of revenue that we can collect. We're no longer constrained even by the amount of money someone will lend us. We're monetizing, we're debasing our currency, frankly, to state it more plainly. As was highlighted by, I think, Professor Ghosh's own testimony, about 25 trillion around IMF members. So if we're doing this, growing this inflation through our own domestic policy, and frankly, through a lot of the leaders of the IMF doing similar things, does this undermine those foreign currency reserves held by those emerging market countries?
Well, the very last question you asked, yes. I mean, to the extent that they're longer term loan, they're holding longer term loans. To the extent it's short term, they're choosing to let it be undermined by accepting these really low rates. Of the inflation's a threat because if the Federal Reserve decides they need to raise interest rates more, and my guess is they may need to make the interest rate higher than the inflation rate at some point, that there really could be a lot of blood in emerging markets. It's a huge concern. The markets clearly don't think that at the moment, but there's a lot of vulnerability. I think that's a big issue. We're talking about these poorer countries where the sums are not so large and they really could be solved with aid. They're just not that big. But when you get to the larger emerging markets, getting agreement with China, for example, on what to do in places their loans are much bigger, that's going to be very hard. It already has been.
Yeah, thanks. I think you did a nice breakdown of the consequences for inflation, and I would just put it in contrast to some of the other things. The time horizon for our problem with our debt is very short. And we've got trust funds for Social Security and Medicare that are on a path to bankruptcy, which really highlights the solvency problems that countries with, an inverted debt to GDP ratio, like America, really should pay a lot of attention to, near-term attention. And as we feel the need to become generous and give to this global charity that's envisioned by some folks, we ought to make sure we take care of business in our own countries so that we don't default on our own debt. So thank you, and I yield back.
Could I just add something?
I've already yielded, but I'll leave it to the chairman.
Yes, very quickly, Professor Ghosh.
Yes, because the 25 trillion was raised, the $25 trillion of quantitative easing that I mentioned was before the pandemic and before the recent Biden administration money. And
Precisely.
We had that over a period since 2008 without any inflationary consequences globally and particularly in the advanced economies. So we had a period of 14 years of dramatic quantitative easing without inflationary consequences, just putting it on the record.
Okay, I think the gentleman has yielded. So I am going to say a big thank you to all of our witnesses. Really, my ambition for these hearings, which is rarely met, is that we have a good give and take of ideas, that we have dialogue, that we have an exchange of constructive disagreement, and we really achieved that today. So I really want to thank all of our witnesses for participating. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I remind members that written questions and materials for the record should be submitted to the email address provided to your offices. With that, and with my gratitude to our witnesses, this hearing is adjourned.